Let's get to Chris Verrone, head of technical analysis at Strategas Research Partners. Chris, good to see you.
Great being here.
So we were just chatting here that, obviously we're looking at the NASDAQ. It's been the story of the year. But elsewhere, there's been a little bit of a maybe nuanced change of character in some asset classes. So what has your eye?
Well, I think what began as a subtle hint of a leadership change maybe a couple weeks ago is frankly becoming more overt here. And there's almost a paradox to the fact that when we printed a 3% CPI on July 12th, if you look at the best sectors since then, it's been energy, it's been resources, it's been copper and China related stuff. So I think there's this, what was a very subtle change becoming more overt here. You see it with crude above the 200 for the first time in a year. You see it with particularly the energy service names breaking out. And I think most importantly, over the last several days, all these copper stocks everywhere in the world are making new highs. So there's a message here that I think perhaps commodities might be reflating. We'll see what that means for the Fed, but it's an important little paradoxical shift.
I guess the question is, taking them one by one, if you look at something like crude, does it seem like it's sustainable? We're still, kind of at the top end of the range recently.
I think the character of that chart has changed. Right? They had 5 chances at $65 to hammer it lower, and the bears couldn't. Back above the 200-day now for the first time, really since last June, last July. And when you look at it, I think importantly, since July 12th, tech and discretionary have given back all their gains versus energy. Right? So since this very kind of Goldilocks CPI print, it's actually been the resources, the metals, the materials, the energies that have actually outperformed. I think it's a very important message. You could be excused for missing it in late July, but I think it's a very important tone change into the back half of the year. You
mentioned China. That has also, I think, demanded a little bit of notice in terms of the way that the equities there have acted lately.
Yeah, so we put up this list of all these commodity inflections that we're seeing, and the premise is, a lot of these kind of began coincident with Janet Yellen going to China earlier in the month. We called it the Beijing Accord, right? So maybe there's something happening here on the China front, and I think where you actually see it is with KWEB. China tech has really turned versus triple Qs. If you look at the pair, you made about a 2-month high last week, so KWEB outperforming Qs. When that goes, it tends to go viciously. There's been 2 episodes of KWEB outperforming triple Qs over the last 18 months. They've been very, very sharp periods of outperformance for Chinese stocks. It tends to be fleeting. If you get it early, I think you can make some money there.
And then in terms of bond yields, we did see them perk up again. Maybe have cooled off slightly, but where's the path there?
I think, candidly, bond yields have been probably the most challenging call all year. They've effectively been in this noisy range since last October. But if I had to point to something, if you look at the 10-year yield chart and the 30-year yield chart, you have the 20-day, 50-day, 65, 100, 150, 200 moving averages all converge at about 370, 375. And those levels have held. So I think as long as you're above that, particularly given what happened in Japan in the last day or two, you have to give the benefit of the doubt to higher yields here, not lower, particularly with copper breaking out as well.
So even with the kind of leadership transition that may be underway at this point, where does it leave the broad equity market in the U.S.? In terms of 5 straight up months, we obviously are, it's kind of acting like a bull market. Does it continue?
Yeah, it certainly acts that way. Our trend work is still very strong here. I do find it a little bit curious. This is the first kind of month end I can remember really all year where there hasn't been a ramp into month end. Maybe a little subtle shift there. That big reversal day, I think it was Thursday, all the price action ever since has actually been within that bar. So let's see kind of how this resolves one way or another. But I think the bigger story, Mike, is these subtle leadership changes that are becoming more and more overt with each day.
And so if that's the case, presumably if we do really get a rotation, it would be at the expense of the mega caps that have been supporting the index, or we don't know?
Thus far it hasn't, with the exception of perhaps Microsoft, which has quietly slipped back below the 50-day. It's actually on the 3-month relative low list today as well. So you've seen some subtle change from Microsoft. That's not extended to the other names here. Obviously, we have some big earnings still in front of us with Amazon and Apple, but so far it's not at the expense. It's to the inclusion of.
Okay. See if that continues. Chris, great to see you.
Thank you. Good seeing you.
All right.